Hello, everyone. I think we are live now. My name is Alex Blackwood, CEO and co-founder of Mogul, and with me, as always, is.
We have Joey Guntao, COO and co-founder of Mogul here.
So we're just going to give it like 1 or 2 more minutes here just to let everyone trickle in. But I mean, we'll start off. I can give a brief update as to kind of the agenda of today, and feel free, of course, to reach out with questions in the chat. The format, as always, is meant to be very interactive between you and us, and so feel free to reach out with any and all questions. I know today was a big day with dividends. We've got updates on taxes that we can go over today as well, and then we can dive into all things Mogul, and potentially there's a surprise or two along the way. And so the kind of agenda for today, or what's on the agenda, will be I'm going to give a kind of quote unquote state of the union, run through all things macro and what you should care about as a real estate and Mogul investor. And then afterwards, I'm going to turn it over to Joey, and he's going to give a little bit more of how the macro affects the real estate, how we're thinking about things at real estate, how he's thinking about going into the markets that we're going into, followed up with a quick update on all things K1, as well as the tax impacts and implications, which are all net positive, of course, for individuals. And then from there, we're going to go into dividends, a little bit high level, more in depth, answer any questions that you might have on there. And then from there, we're going to dive even further into a potential surprise. So who knows? And then from there, we're going to leave enough time, probably 20 minutes at the end, for a lot of Q&A. I know last time we didn't get to as many as we wanted to, and hopefully you should have received an email from one of our team members that answered your question outside of the chat. And so we are doing our best to keep up with you. Today is John running the behind the scenes work, and Larry's at a wedding in Mexico at the moment. So without further ado, I can jump right into it, unless I'm missing anything, Joey.
No, that's absolutely perfect. Really excited to start going through the updates. Hey, Larry's in the chat.
Larry's in the chat. Okay. All right. Perfect. Well, I can give a brief update. And of course, by all means, feel free to reach out with questions in the chat and we can get to them later. But a few major updates that we have in terms of macro news is obviously the first two things on everyone's mind is the Iran conflict and the oil prices. Obviously, oil prices are hovering right around $100. And Joey actually brought this to my attention earlier today. But if oil prices were to touch that kind of 120 number, a lot of economists are actually saying that that would lead to a quote unquote macroeconomic downturn. Now, reaching 140 to 150 could be a full blown global downturn. I do say this is all to caveat. This is all contingent on oil prices rising that much. And it's contingent, of course, on the Iran status or the Iran conflict there. The White House press briefing said that it's roughly 4 to 6 weeks that the conflict will last. Of course, that timing is quote unquote fluid. And when you think about it, it times up incredibly well with in May, Trump is meeting with Xi Jinping in China to talk through obviously all things there. So I know we're getting questions right off the bat. I'll get into them in a second. The 4-week rate rise, obviously mortgage rates are a little bit higher. They've been climbing for the past 4 weeks. It is reminding investors that this is not a rate only goes down environment. They're up because obviously of inflation concerns. And as we know, the Fed can set the benchmark, but they don't necessarily set the rate itself. It's all up to consumer sentiment, investor sentiment, and institutional sentiment that drives that rate up. So with obviously inflation potentially coming in higher on the heels of the Iran conflict and everything that's going on with oil, that can push the rates up. As a result, they've been climbing for the past 4 weeks. If you're looking at IPO markets, I mean, it's going to be a banger of an IPO market over the next 12 to 18 months. SpaceX merged with X to become SpaceX, of course, and OpenAI and Anthropic all are looking to make their public debuts in kind of the next 12 to 18 months, much to the ears or the chagrin of all the investment bankers out there who hope to kind of capitalize on the success they had from this past year, where they actually received 250K on average bonuses this past year. And last thing that I'll touch on, or two last things that I'll touch on, number one being, if you're a fan of Silicon Valley, you're obviously seeing all the memes that are flooding the internet with the Pied Piper moment of Google. And by that, they released a lossless compression algorithm where basically it helps boost the AI, just the different model trainings as well as the inference, because there would be no loss due to accuracy. I won't go into the actual technical methods because number one, I don't think I could. Number two, because I don't think it's necessary as much as the impact that it might have on AI and what's to come. Now, last thing I'll touch on is there has been consumer sentiment, which bodes very well for the real estate market. And I'll turn it over to Joey in just a second here. But time and time again, we're seeing a flight from these soft assets to hard assets. The idea being that software can be disrupted by AI, but we all need somewhere to live. It's one of the three necessities of life. As a result, the institutional investors are piling their money into industrial assets, data centers, as well as multifamily. And so that's a massive improvement for us. Obviously, we're buying at the exact right time, the cash flowing assets. It really serves as one, an inflation hedge, but number two, an AI hedge, so to speak. And so with that, I can turn it over to Joey to talk through everything Mogul, the markets, and what he's saying.
Awesome. Yeah. So how does that translate to the real estate, right? Lots of volatility in the market right now, as Alex highlighted, with between the conflict, the rising price of commodities, the rising price of natural resources. It's created a lot of speculation and hence a lot of volatility in the public markets. Couple that with the AI booms and massive IPO announcements coming soon. You see a lot of activity, right? And for better or for worse, it's definitely resulting in a pretty substantial return to hard asset investments, right? Things that you can control, like private equity and specifically real estate. So it's, the Mogul platform obviously provides a really good value proposition when it comes to hedging your investment risk, right? I mean, we all invest in public equities, especially a lot of the investors on the Mogul platform. And the Mogul platform itself is an incredible way to invest directly in the real estate assets, specifically residential real estate assets, right? Which will always be more of an inelastic good, if you will. The demand is very steady in terms of the need to rent homes and in terms of the need to buy homes. And so single family rentals, specifically midterm rentals, short-term rentals, and long-term rentals are an excellent hedge to kind of what's occurring in the markets right now, right? And typically a lot of investors will flee to kind of, bonds, right? And steady cash flow yields, treasuries, high yield savings accounts, and think of real estate as kind of a more premium, cash flow efficient method of doing that. On top of that, you get the benefits of potential tax benefits, right? At the end of the year, each year, according to passive losses and some of the exciting new announcements that actually came from the big, beautiful bill that we'll talk through as well. But all that to say, right now, more recently, the Fed decided to keep rates steady. We're closely monitoring kind of the U.S. Treasuries. Luckily, a lot of our rates aren't, materially affected, especially in the short term, which is great given a lot of the financing that the Mogul platforms receive for capitalization are more institutional grade, right? It's that interest only 10-year fixed, 30-year total term mortgage that's then capitalized at 75 to 80% loan to value of the purchase prices of each of the assets, and so provides tremendous benefits to the bottom line cash flow in terms of bolstering what would be a non-levered investment with no mortgage, a lower margin on cash flow each month and each year for your equity dollars invested versus that higher amount marginally as a percentage of your dollars invested because of that leverage and pre-negotiated return with those lenders. So, a lot of our rates are staying kind of in and around the 6 and sub 6 range, which is tremendous. I don't think anyone individually would be able to achieve that right now. Even, seasoned investors like Alex and myself, if we went out individually and tried to source these loans, it'd be really hard to qualify for loans that are IO and sub, 6% in most cases right now. So incredibly beneficial for the Mogul platform. In terms of, where that leads us today, we're really focused on a lot of our cash flowing assets, right? So, right now, controlling the market in terms of what we can control and controlling property performance, midterm rentals, long-term rentals, even short-term rentals, great cash flow machines, great alternatives to, again, that kind of high yield savings account, high yield bond, high yield treasury that you would be looking for in terms of, securities instruments. But these are obviously direct real estate investments in comparison to those. And so just tremendous benefits across the board. All that to say, Alex, if you have anything else to add there, happy to kind of dive into tax season and kind of what that means for everyone.
Yeah, I had just one thing to add. I think because it's the end of the day, I think the energy doesn't convey enough just how big that interest only 10-year fixed is. When you think about what happened coming out of 2020, 2021, when prices were inflated, especially from multifamily assets, a lot of the time people talk about how the multifamily assets investors really got crushed, for lack of a better term. Now, if you think about why that was, it was because they thought their source of debt would never go up, right? Or their cost of debt would never really go up. As a result, they didn't buy what are called rate caps. So rate caps are obviously you basically prepay the rate to stay at a certain kind of ceiling, so to speak. And the idea being that if rates exceed that ceiling, you don't have to pay beyond that spread. And so the idea being that this 10-year fixed interest only loan is incredible because even in the event of any sort of macro downturn, you're still paying that fixed cost of capital. And so any yield above it really is just gravy on top. And you've got what's called margin expansion there. And so just wanted to touch on that. I think conveying that is absolutely massive and something that we really could not have achieved at an institutional capital way. It's all about this sort of asset class that you're able to achieve such incredible and accretive leverage.
Yeah, no, that's a really good point, right? And these rates are in pre-negotiated returns to the lenders, right? So if a property is returning 8% in terms of the yield on its total purchase price or total capitalization basis, and the lenders only do 6%, you're actually making a premium of what's due to that lender on top of your equity, right? Which is blended to around 30 to 40% after total capitalized cost. So tremendously valuable. It's a really good point.
Yeah, taxes.
Yeah, taxes. We're all obviously, if there's one universal language here, it's tax season, right? Everyone's going through it right now, individually, businesses, everyone's going through tax season. So one, just wanted to give a major update on the Mogul taxes. We are at the tail end of our K1 process. So really, really excited to announce that all of the K1s will be available in tranches here shortly as we are releasing the K1s in your portal. And really, really excited to announce that if you do want to, capture the full benefits of your K1s, I personally, take out an extension every year at minimal cost to myself, and usually it benefits in terms of being able to plan for your passive investments in other platforms or your K1s from, direct investments in the Mogul platform, and being able to use those passive losses to offset your passive income from other investments and or the distributions from the Mogul platform, right? So with that, super excited to announce that K1s are at their tail end, and we are really, really excited to be able to release those in your portal. So keep a lookout for next steps there. You should see some email communications coming through. And with that, there are some, Alex, did you have anything else to add there? Or do you want me to hop into kind of the big news with the latest legislation?
Yeah, just one more thing to note that obviously the team has been working around the clock to get those K1s. That's not for lack of trying. Obviously, we're going to get them in before the buzzer, so to speak. And the idea being that a lot of investment platforms, especially as it comes to real estate and K1s, wouldn't even give you the K1s until September, October. It's really been we've kind of reinvented the way that our tax provider actually even does K1s at this sort of scale. As a result, it's led to expedited filings for a lot of our assets to the point where you'll get K1s in the next little bit if you haven't already received your first batch. So I will say that that's something that's absolutely massive. And it means that as we continue with this tax provider, it'll only get speedier because we've almost reinvented the way they do taxes. And in reinventing it, we now have the baseline, especially for next year. So all the guardrails are in place, that the idea being that you can continue. And my coach always used to say, starting a wheel from scratch is harder than just maintaining the same wheel speed. Anyway, that's over to you, Joe.
No, 100%. Yeah. I mean, the fact that we were able to even pass through each entity to each individual investor, the K1 is really not done. Or hasn't been done the way that we're doing it, which is great. I mean, if you invested right now in a REIT, right, public or private, a lot of those potential tax benefits are actually captured at the top. So like, even as we're going through this process and innovating with our tax teams, they're wondering, oh, are you passing these along to each individual investor pro rata? Like that's a lot of extra steps. And it's like, absolutely, these are partnership returns. These are full pass-through entities. We don't capture any of the potential tax benefits of any of these assets as a corporation. It's all passed through directly to the partnership. So tremendously beneficial. One of the many benefits of investing on the Mogul platform. But happy to kind of go through some of the more unique kind of changes that have happened in recent legislation according to the big beautiful bill, but also additional legislation that's been passed recently. So with your benefits of your K1s, you can actually capture the uncaptured, what was referred to as a passive loss, right, from the depreciation schedule on your real estate asset. So the real estate itself is, the improvements upon the real estate are depreciating assets, right? You have the land and then the improvements upon the land. And you can carry forward that depreciation as a benefit to offset any taxable revenue from the property, right? Any taxable income, post expenses from the property. And with the new legislation, you're actually able to carry forward those losses year over year indefinitely. So even if you're not capturing your K1 this year, you can capture it 5 years from now, 6 years from now, 7 years from now. So tremendous change. I know I have a lot of K1s that I'll be using to capture taxable income in the future. Luckily, every Mogul asset that is distributing K1s is actually distributing a full passive loss, which is tremendous, meaning that there is no taxable income for the LLC and hence for the partnership. So tremendously valuable for everyone. And again, those are not, passive losses that just, I guess, disseminate into the air, right? I mean, you actually are able to capture them indefinitely, which is a huge change. And so that'll be very, very beneficial for everyone. And depreciation does start the day that we actually purchase the asset. So that's great in that taxable year. And then a few other changes as well. So you are actually able now to use those carry forward losses to offset even the capital gains of that investment itself once that investment is sold, right? So if you liquidate your full position in that investment, say Alex or I liquidated a $10,000 investment in the Gruden, right? In 3 years from now, we're actually able to use those passive losses from those K1s uncaptured through 3 years to offset those gains, assuming that we don't have other real estate related income or other passive investment income to offset with those each year. If you're not invested in multiple platforms and passive investments that would be used to offset those investments. Is that helpful, Alex? Am I being clear on that?
You are.
I'm happy to simplify it a little bit more. Definitely let me know if I need to dive in deeper in any portion of that.
No, I mean, I do think that it's definitely helpful. And obviously the W-2 offset too is just like a massive benefit to end investors. I do think it's a case of, as you're thinking through tax preparation, there are so many loopholes that you can quote unquote hit on, but I would say the real estate being the absolute top one, that all these high net worths, that's kind of why they don't end up paying taxes. A lot of times they use that depreciation. And yeah, so just going into that a little bit more, but it did help a little bit. Yeah.
100%. I actually didn't even touch yet on what you just mentioned. That's another huge exception, is that if your AGI, your adjusted gross income in the year, is under $100,000, you can actually use up to a $25,000 allowance to actually now offset your W-2 income. So I know, even if you would have asked the Mogul team a year ago if you could use your uncaptured passive losses from your K1s to offset your income, there are now exceptions actually where your AGI is at $100,000 or below as an individual tax filer to offset that. And it phases out from $100,000 to $150,000 of AGI. And again, that's adjusted gross income annually. So huge change. It's actually really, really beneficial for a lot of investors, especially if you're a contracted, 1099 individual, right? That could be tremendously valuable for you. So just examples, but really, really cool changes. And, we're definitely going to be able to pass all those along in our K1s this season. So really exciting stuff.
Hi. Well, I mean, obviously that was the big K1 update. And I know that it depends on who you are if you get excited by taxes, to be completely honest with you. I always quote that the best call I ever had in my life was a Friday night, 5 p.m. call with an accountant who was the former head of a family office's tax team. And he walked me through for 2 hours, different tax, I guess, treatments that you could implement to benefit yourself. And I think that especially if you look at everything that happens, not only with the big beautiful bill, not only what happens with the K1s, not only what happens if you were to set up your own LLC and business entity, it's amazing what taxes can do and just how incredible and intricate you can make them, and also to your benefit. And so with that, I mean,
I usually like hold off on a lot of like any other passive investments outside of Mogul, obviously, like during tax season. But the great part is you can capture those benefits through direct real estate investments. So if anything, I usually pump the gas for lack of a better term, on my real estate investments and private equity investments during tax season and kind of before tax season leading up to the year. And then we'll save, public equities, 401k investing for the later 3/4 of the year, if that makes sense. So just my personal experience, but yeah.
That's fair. No, and I mean, with that, I think we can dive into, one of the questions that we've been getting a lot, and this is shout out to John for bringing this to our attention, but just markets in general. How do you choose specific markets? Why do you choose assets and operating types within specific markets? And it's not just because you hear of a market on the news and we dive into it. It's because we're looking at the data behind the individual market. And so, Joey, if you want to go into a little bit more of the quote unquote market watch.
100%. Yeah. Market watch going to be a really great segment as we highlight some of our upcoming markets, some of our markets to focus on right now. With that, I do want to bring Michael on. You guys have met him before. And for those that are new, I'm happy to introduce him. So Michael, if you want to join the stage, happy to get you involved.
Hello, fellas.
Hey,
Hello.
Great to see you. Looking great per usual.
Yeah.
I don't think you're allowed to say that.
Oh, okay. Well, retracted then.
I don't mind hearing it. You could say it to me.
No, yeah, great to have you per usual, Michael. Just for those that haven't met you, maybe you want to give a quick background on yourself.
Yeah. Thanks for having me on. As always, Michael Cazales, Director of Real Estate here at Mogul. I, for one, do not get excited about taxes, but do understand the power it has that there is with a good CPA that can help finesse them for you legally. But yeah, my background primarily on the debt side of real estate and the mortgage business, kind of handling things on the acquisition side of the house here at Mogul. And yeah, happy to dive into some market talk.
Awesome. So with that, yeah, I'm happy to give kind of the macro overview. Right now we are watching a lot of the markets really closely. And as you know, I gave kind of a brief overview of where the macro real estate market is going, what that means for rates, what that means for yields. You will see generally across the board that there's going to be a little bit of yield compression, especially outside of residential real estate, right? With some of those less sticky rents, especially in like the hospitality sectors and office sectors. But luckily residential real estate, like I said before, very, very sticky. Yield spreads continue to perform extremely well. Nearly every single one of our markets actually show positive rental gains in the next 5-year terms. So that's tremendously valuable for everyone. Even if you see rents stay flat, right, according to year one underwriting, you would still be achieving what we target as that kind of 7 to 8% year one, levered cash on cash, right, return on your equity invested. So with that, this is the market watch segment. I think we're going to focus on 3 of our markets to watch today, 2 in Florida and 1 in Arizona. And so with that, we're going to talk through kind of Cape Coral, Tampa, and Phoenix. And I can just go ahead and do it in that order if that works with you guys. But, right now, Cape Coral, very, very valuable market. We have been watching it closely. We do have some active investments that you will see currently launched and continue to be launched on the platform. Right now, the market is presenting a really good opportunity for discounted basis hunts. If you would have seen the past 5 years in the market, you would see a pretty noticeable value reset, if you will. So both on the rents and the value swings in terms of the actual purchase prices that assets are selling at, you would have seen a swing over the past 3 to 5 years actually, which is tremendously valuable because that means we're buying at a dip, right? And not only in a macro perspective do you always want to buy at a dip, but if you can target the markets that you're buying dips in, obviously that will only help your value proposition going forward. We can control the performance of the assets to our best of our ability, and with our managers, we can control cash, right, and cash flows. Usually what you can't control is capital markets. And so being able to buy at a dip and rely on the growth in the market going forward, that's what's going to drive your capital appreciation, right? That 2 to 3% annual increase in the value of the real estate, which then translates to multiples on that for your equity, given the the mortgages in place don't receive any of that return of the capital gains, only the APR that's due to them for the rate that they're charging, right? So anyway, that's kind of the lowdown on the Cape Coral market. It's a great time to buy in the dip. Go forward projections are showing anywhere from 4 to 5% going forward in value, as well as 2 to 3% in annual rent increases, kind of at conservative levels. So very, very exciting stuff there. Michael, any comments additionally on the market that you wanted to talk about in terms of product specific or anything that you're seeing on your end as you're going through some of the acquisition processes?
Yeah, so you definitely hit a lot of the key points with Cape Coral. Just to hammer home, kind of buying at the dip. Looking at prior 5 years and go forward 5 years, the market kind of hit a peak in that 2021, 2022, both on rents and home values, which had since hit a decline. And now we're actually buying at the inflection point where we are going to see an uptrend based on the core logic data that we base a lot of our market thesis behind. And that uptick we're seeing is going to be kind of Q4 is when it flips from the negative to the positive on both rent growth and value. And then, like you said, Joey, the 4 or 5% annual on the go forward through 2030. So that's, hit it right on the head. And that's kind of why we're bullish on Cape Coral.
Awesome. With Alex, anything else to add on that, or should we transition into Tampa?
No, I think we transition into Tampa. I think we're just as a reminder to everyone, if you can leave questions in the chat, don't worry. The reason I keep looking over the right is I am taking note of all the questions. And so even if we can't get to you today, John has been doing a great job. John and Larry has been doing a great job, answering the questions in the chat, but also post them on the side. And so I'm starting to look at it, but there have been a few that are almost forecasting something. Anyway, there we go. Larry just fucking, anyway.
Watch it for fantasy.
Yeah, just, all right. Anyway,
I'm just
with that, yeah.
I'm just joking. With that, let's hop into the Tampa market. So Tampa, I would say just in our market watch segment in terms of comparing, it's fun to compare the markets in relativity, right? So you have your Cape Coral, which is a kind of discounted value play right now, buying at the dip, relying on growth fundamentals, not relying on, but using growth fundamentals to bolster kind of the go forward look on both capital appreciation and rent growth across all three of our product types going forward. Tampa, I would say, is the middle ground. So Tampa is more of the balanced market right now, in my opinion. And just looking at the data, right now, I would say one of the things to watch in Tampa is just being aware of oversupply trends, right? And the great part about some of the midterm rental focus that we're launching in and around the Tampa area is that you will see that there's a moat around a lot of these midterm rentals, especially the pad splits, right? That's the business plan and the platform that we operate on for our midterm rentals. There's a huge moat around them. You're seeing vacancies that are very low, occupancies that are very strong, monthly rates that are also continuing to trend upward and have held relatively strong over the past 5 years and should hold very strong over the next 3 years. But you're definitely not seeing a historical dip, and nor are you seeing any sort of market indicators that would show that the market is going to decline over the next 3 to 5 years, right? We're actually seeing trends with sale inventory up about 9.5%. And rents up about 9% year over year, which is tremendously valuable. Right now, you're, again, just making sure that you're watching that oversupply. You don't want to buy in markets that are too oversupplied, but the good part is that we're creating incredible moats around all of our Mogul properties, whether it is a short-term rental, a midterm rental, or a long-term rental. They're not as much at the mercy of what the macro supply trends are showing in a market. The market in general right now is generally undersupplied just across the board in the US. Tampa presents a really balanced fundamental in terms of the middle ground, in terms of, not too much rent kind of increases and capital appreciation in the go forward. It's not going to be, that 5 to 6% that we're seeing in a market like Cape Coral, but very steady up into the right, at least 2 to 3% annual value increases and upwards of 5% to 9% in some years on the go forward. So Michael, I don't know if you want to jump in on anything additional there.
Yeah, definitely. So, when we're analyzing markets, it's kind of two-pronged. One, it's just the greater real estate market as a whole, and then zoom down into the actual product type and business plan that we plan to operate in that market. So with Tampa, primarily our assets are midterm rental pad splits, and that market as a whole has an 87% average occupancy on pad splits platform with over 2,400 units. So it's a very well-established market in terms of co-living business operations. And what's nice about the established markets is pad split actually funds marketing drives and demand to get more tenants placed into the units of that market. So when it's a mature market like Tampa, you have pad split company dollars pushing in to help drive additional demand, which is great for not only keeping occupancy high in existing assets, but some of the turnkey net new pad split assets we bring online, that demand gets ramped up very quickly because of it.
Yeah, that's a great point. That's a great point.
Really quickly, before we jump into anything else, there have been a few questions here and people saying that they want to hear questions in relation to Cape Coral.
Yeah.
So John Levicki did mention you have a number of properties in Cape Coral, given that is an area prone to hurricanes and destruction, has also continued to experience lower prices in real estate. Why are you in this market? And yes, I mean, I would love if we could just briefly touch on that. And I know we're also, if we want to move forward into the dividend overview too, because I know we're coming up almost on time with 30 minutes left.
Yeah, we can keep this quick, and I can kind of touch on this one for the start. So with the assets that we're buying in Cape Coral, the owners that we're buying from have owned the properties for 10 plus years. And with kind of recent hurricane activity, we pulled both flood reports, insurance claims, and all the sorts on the properties, all of which had no claim event against them due to hurricanes. So that gave us a lot of comfort in kind of the pocket of Cape Coral that those properties sit in. And we also leverage a very extensive bit of insurance as well for any catastrophic weather events. We're in that market because we like the assets that we're getting. And then Joey already kind of touched on the market as a whole and kind of capturing that upswing from the dip.
Yeah, and that's a great point. Like the only thing I would add there is that we actually capitalize specific what's the
hurricane deductible.
Thank you. Yeah, the deductibles for events like hurricanes in those markets. And so when you look at the capitalization and the analysis tools for the properties, you'll actually see that includes a contingency for those deductibles. So that's a great point. And then I'll just give a 2-second overview on Phoenix. It's the cash flow king. So you're going to see that it was oversupplied, continues to be oversupplied. You wouldn't want to rely too much on capital markets appreciation as you would in, say, like Cape Coral going forward. But cash flow remains tremendously valuable across both MTRs, LTRs, and STRs in and around the Phoenix area. So that's the kind of 411, if you will.
Plus, my sister lives out there. Kind of was cool visiting. Anyway,
that's awesome.
That too.
That's awesome.
All right, sweet. Should we jump into a quick roundup of dividends before we announce into kind of the surprise?
Yeah, I can keep it very quick. So as you have probably seen, dividends are definitely improving substantially month over month, especially as we get out of what could be referred to as kind of the down months of the year, going into the latter half of the year and going into the first month or two of the year. So tremendously valuable performance in terms of the improvement that you're seeing across the board, especially in a lot of the short-term rentals that are on the platform. That seasonality really shows its face the most obviously and strongly kind of in the short-term rental asset class. And so as you see that swing happen going into the February and March months, you're going to see the biggest swing upward and to the right in terms of improvement, in terms of cash flow, in terms of dividend payouts. So definitely really excited to see that. And I'm personally very excited for the STR investments to come.
Yeah, and I echo that. And I think the main headline of this month's dividends is very strong month. It's going to be even stronger next month. Because like you said, Joey, with the STRs, and you really see that strong uptick in March. And I know we're at the end of March, but these dividends are on February's performance. So we already have a lot of the data on how March has gone across the board on the STRs and midterm rentals. Everything's looking very favorably. And again, we do try to put a good bit of detail into each property's memo, which you can see on your portfolio page. So if you don't already see that or utilize that to gain insights on how the properties have performed, definitely check that out, because we do try to put as much helpful information in there as we can.
Yeah, those are great points.
And also reach out to our team members in last case scenario. I know last few times Larry's thrown his email into the chat, but of course, I don't know if he will this time because he's in Mexico. But all that to say, we do have a lot of questions and we got a lot of things going. If you do have questions, we have all of them on the side. John's been running it. There we go. Bingo. John is launching his email out there. I mean, without further ado, I mean, some people kind of guessed a little bit about the surprise. I don't know which of you two has planned to reveal the surprise, but
yeah, Michael, I will afford you that honor.
Yep, I can do that. All right, so without further ado, we are launching a new property, as we always do on our webinars, and it's actually in a brand new market that we haven't been in yet, and that is Colorado Springs, Colorado, and this is a long-term rental fourplex that we have in this market.
Can we zoom in a little on that?
Yes.
Yeah.
That better? Yeah. So this property is need a little bit more.
No, that's fine. I just got old eyes.
Yeah.
Yeah. So this is the Peterson. It is a fourplex in Colorado Springs, just minutes away from Fort Carson. It was fully renovated in the past year, and we actually got this under contract $50K below the seller's ask price, and it is an off-market transaction. Lot to like about this property. I mean, another perk of something that just came about within the past couple of days, we're actually getting a brand new roof funded by the seller prior to closing. There's some hail damage found on it from our inspection, so that's another huge positive in addition to the rest of what there is to like about it. But yeah, it's a 4 units each with 2-bed, 1-bath split. And kind of jumping into the financials of it, monthly rents are underwritten rents are posted below what the actual are. And we did receive all actual financials from the seller. In addition to rents, we also received their expense data as well. So that really helped us drive accurate underwriting of this. Also, and as always, we put in a little bit of a buffer to be conservative as possible. So yeah, this is the Peterson, and Colorado Springs specifically. It's a very strong market, and there's, I guess the thing to say about Colorado Springs is stability. So there's over 30K active military members in the area, all of which get government stipends towards their housing. So it provides a very strong, consistent demand in the rental market. And just the greater Colorado Springs city is anchored by aerospace and defense companies, generates over $10 billion annually in the economic output. So both on the military side and also kind of the private sector as well, just very strong indicators for the market as a whole. And like I said, the core logic data that we do base a lot of our market decisions off of show the same, with consistency and very positive outlook on the go forward for Colorado Springs.
And for those paying attention in the chat, obviously we've thrown the link in. This will be launched tomorrow to the public. I will say last time we sold out the asset in the webinar itself. So by all means, jump into that. Anyway, I turn back over to you.
Yeah, that was a great overview, Michael. We're really, really excited about this market, tremendous operators that we're developing relationships with, and increasing our pipeline with sellers as well and brokers in the market. So a huge shout out to the team and to Michael for sourcing this incredible opportunity.
And I think we got a little bit more investment if you want to refresh it. I think we're hovering a little bit higher too.
Okay.
So there we go. Sweet. Do we want to jump into any of the numbers a little bit more, or are we good to start jumping into these questions?
You tell me. If there's a big backlog of questions, we can hop into those. I could also touch just quickly on kind of the high level numbers. I mean, we underwrite on a 10-year hold. Average yield is coming in just short of 9%. Annual return on the IRR side, 10.5, with year one yield hovering right around 6.5%. So very strong metrics, especially when considering it's a very stable long-term rental business plan that we're operating with this one.
And Michael, can you scroll down to the bottom just so I can provide like a 5-second context on what that return means for everyone?
Sure.
Just to the cash flows.
Good
Maybe
there.
just a little bit lower. Yeah. So when you see right here that 10.46%, right, that 10.5% IRR, so that's a compounding annual return rate, right, over a 10-year period. So when you see a multiple on your investment, you're looking at that 2.06% or 2.06x, right, over that 10-year period. You're actually, that means you're 2x on your money, right, your equity invested through that 10-year period. So that 10% isn't a 10% return on $100 invested. You're not making $10 over that 10-year term. You're actually making a 10% annualized compounding return on that $100 invested. So just want to provide a little bit of insight into what that generally means. It's a very real estate or, very private markets, private equity specific term, in terms of your compounding return, but just wanted to provide a little bit of context on what that means.
And if you go back up and refresh, I think we got a little bit more into things are obviously moving along quite quickly here at Mogul. Bingo, already near the 30K mark. Pretty cool. Yeah, I mean, I do think we have a bunch of questions in here. Do we want to just jump right into those? I know, obviously, we got 19 minutes left, and I want to be cognizant of time, and we typically run out of time on these types of questions. So should we just jump right into it, or what?
Definitely.
All right, so I mean, number one, right off the bat, I'm going to ask the question-specific ones that are specific to this property. I think that, I mean, if anyone has any specific to this property, of course, that we can jump in. What are the rents currently for these units in the Peterson? What's the rent for the most recently rented apartment, and when was it rented?
Yes, so there, I will pull the rents. They're 1,500, and I'd have to look on the other two, but I think the first lease to expire comes up in August. So we're still a good bit away from any potential turnover, and they very well might extend their lease.
And like you said, Michael, the total monthly rent that we're underwriting here is actually conservative to the current top line rents that are being achieved at the property, even before that mark-to-market opportunity. So, it's great that we're conservative in our underwriting. Current actuals are actually above where that underwriting sits today.
And then Chris says, what's the 100K difference between the year-old Loomis properties, 100K difference between the year-old Loomis properties being comped versus the recently sold ones?
I'm not sure I followed the question.
On sales comps, Michael.
Yeah.
The 100K.
Yeah, what's the 100K difference between the year-old? Yeah, Chris, Joey, are you following or?
No, I assume Chris is probably looking at a CMA himself or another property nearby in the market.
Yeah. Okay. Yeah, if you wouldn't mind just reaching out in the chat. But then Joe, have they had any historical periods of empty units for extended periods?
Not in this one, they have not, because they recently fully renovated this and leased it up very quickly.
And then when will you actually be closing on this and starting Mogul operations?
This will be closing the first week of May.
Incredible. All right. So, I mean, those are a lot of the questions that we have on the asset. Of course, feel free to reach out. I think we got a little bit more investment over the last 2 seconds, which is pretty cool. If you want to just refresh it.
Yep.
We should do a real live ticker for this one.
Yeah, it's a great idea.
That'd be cool.
And bingo. Nice. All right. Well, with that, should we just jump into questions, or do people prefer questions or us to jump into more of the properties that are available on platform with the remaining 15 minutes? I think it's questions. A lot of questions coming in. I am just going to rattle through what's the status on the Rudolph. When will I get the first dividend? Will it be next month? Also, how can I cash out money in my bank account? There is a withdrawal feature in it. So we really need a map and visual of our investments, please. I completely agree. That will be something in the hopper, so to speak. But yeah, what is the status of the Rudolph and first dividend for that?
Yeah, we recently just closed on the Rudolph. So at best, next month can be a partial dividend payout, and the following month will be the true first dividend off of a full month of operations.
Perfect. And this one is a two-prong because I do think that there's another person asking about the Dolly HVAC. Why is there HVAC repair on Dolly even before it started operations? Also, is there no 1-year warranty on new acquisitions?
Yeah, so there was no home warranty offered on this one. I believe where the HVAC is located is in the pool room, if I'm not mistaking it, with another property. But that added a little bit extra wear and tear on the unit due to the moisture of the room and whatnot.
Yeah, I will say that these are all capitalized expenses and all also negotiated through the closing processes. So when you do see these, whether it is a governance vote coming up or a an email blast, right, about an update on a capitalization decision or a major financing decision on the property, those will be passed along to you regardless because of the governance rights of the Mogul platform. So that's the reason that was passed along as well.
And then dealing on the side that received first dividend, and when I went to my account, when I found the place to do that, I could not transfer the full amount. It seems that I had to leave 1 cent in the account. I did not transfer yet. Just wondered what that was. To be honest with you, I think that's more of a system-based problem. So we're going to have Aton reach out to you there, John. Really appreciate you hopping on the webinar. Chris said, did the Gruden depreciate? Yes. I mean, that's kind of the benefit of real estate. We do depreciate the asset. I will say that because operations started on that this year, you don't need a K1 for this past year. So be aware of that on the go forward. Does Mogul do cost aggregation to get depreciation in year one? Well,
Yes, we do cost aggregation analyses, especially where pertinent. So, if it is a newer property and a newer investment, as Alex said, any properties that you would have invested in this year, you will not be receiving a K1 for until next year, right? Because of obviously the taxable year is 2025 for this year. So any properties that were invested in 2025 and prior do have carried forward depreciation benefits and accelerated schedules. And that's why, all of your K1s will show passive losses, even though there is income being distributed to you that otherwise would be taxed. So.
Incredible. And then we also got a feature request. Please add a vertical scroll bar to your website. It's funny because I had actually discussed that with people and vehemently argued against it, but it does seem that people do want that. So Greg, it will be coming your way here shortly. But I have made note of that for our team to reach out once it's up. Dan said, Alex, enjoy your newsletter each week. Do you read each book you highlight? Where do you find the time every week? To be honest with you, long backlog of it, and I read a lot, and Joey can attest. It's I don't know, I hate learning in school, but I like learning outside of school, and so that's where it comes in. But if you're fresh, I think we got another big check or big few checks here.
If it's any indication that Alex's favorite call of all time was a 2-hour tax education call, that just goes to show how much he likes to learn, whether from books or anything outside of a school curriculum.
Fair. Yeah. I mean, you got the bookshelf behind me. I hate the Kindle. I hate the whatever, what a guy. Is that John? Is that about me or is that about
you? I assume so.
Yeah. All right. Just clowning me in front of the world. Not embarrassing at all. What's Mogul's actual relationship with PadSplit? To be honest with you, we're obviously very close on the business side. No formal relationship except when it relates to the properties itself, but obviously, we work directly with them. They work directly with us. We're friends of Atticus and obviously the entire team, Cliff, over there, and have been working with them tremendously and going actually to a bunch of conferences with them. So outside of that, I think it's working directly with their team also to source, as well as on the inverse when we rent out the PadSplits. Anything else, Michael, that I think?
No, yeah. I mean, we're a very large operator within their platform, so they treat us very well, and we have great relationships with all leadership over there.
Perfect. And then so many of the new properties are renovations and then to be launched on PadSplit. I'd love more information on the planned renovations, meaning what is being done, adding square footage, adding parking, complete renovations, etc. It's sometimes hard to invest blindly in some of these. Do you want to give some overview on some of the update, or is that more specific, more pointed towards the broader transparency around it. I guess that's the
I think that brings an opportunity. That's good feedback. We can be extra thorough in the property write-offs to show exactly what is being done to the properties. I mean, granted, a lot of them are fully gut renos, and the square footage that you see listed on the property offering is what the end conversion square footage will be. If you want to see what the end product looks like, if you're invested in some that have not yet been completed, I would take a look at the Rex. That is one that was under construction. We got pictures back on that, updated the site with it. So just to see kind of the quality of the work that gets done, specifically in the Arizona market, that's a good place to look. And we will take that under consideration and put more details in the property write-ups for those net new offerings.
Yeah, we are scaling up the product's life cycle, which is great. So you're not only just seeing, the core assets that you saw in the early days of Mogul launches, you're seeing properties that are value add, right? That we're actually achieving cost basis premiums on ourselves, or receiving, net new pad splits, net new STRs that are new constructions and have gone through extensive due diligence on the inspection reports, on the appraisals, on working with these operators directly. We're very, very selective about any and all GC relationships that we have and any and all builders that we work with. A lot of them source directly through pad split or the platforms that we're working with.
Incredible. And did we touch on this when I was there we go, the Atlanta markets? We did touch on that. I see in the certificate of ownership that the ownership is incorrectly recorded in my own name and said it easy to fix or not. Dennis, yeah, we can fix that on our end. I will say all of it's recorded on chain. The receipt or certificate of ownership was a feature request, but let us reach back out to you. It's pretty easy to fix over. I
did see other questions, Alex, too, about like how the equity distribution works in general on the platform. If you just want to give like a quick overview, maybe.
What was the exact question?
The exact question was, how do tokens work? What are they exactly? And there was back and forth in the chat about like what they represent. How is a token equal to equity and all that good stuff.
Yeah, of course. So, I mean, when you think about blockchain and when you think about real estate as a whole, there is no greater use case than blockchain for real estate. And I will say that blockchain as a whole is not cryptocurrency, right? The idea behind blockchain is it's a more stable ledger of ownership, which is it's a chain of blocks that's completely immutable. But what does that sound like? A chain of title as it relates to real estate. And so what we do here is we tokenize everything. What that means, for lack of better terms, is all your ownership is recorded on chain in a completely immutable ledger, to the point where if we ever were to go away, it is already recorded on ledger. It exists even outside of our platform in immutable fashion. And so it's, number one, a more transparent way to own real estate, because your ownership is recorded with the tokens. They represent ownership in the individual property. And number two, it lowers our back office expenses, because if you think about the Web 2 way to have done it, we would have gone to a lawyer and had to draft up documents for us as individuals to meet with you and DocuSign them and basically redline them, all that. What we have is already legal documents drafted that are inside the token. And so they already reside on chain in mutable fashion. So you have recourse in whatever case scenario, your ownership is recorded outside of our platform. All that to say, you don't have to know what blockchain is. You don't have to know what tokenization is, but it benefits you tremendously because it lowers your back cost expenditure, which lowers fees to you, increases returns as a result, and on the inverse, protects you in the event of anything. It basically extracts you from Mogul in any sort of concentration risk. Did that help?
Yeah, that's a great overview.
And then there is a question about the situation with the WAGs. Do you want to give an update there?
Yeah, 100%. So the WAGs is a fully operating property, which is great, meaning that there are no additional cash flow considerations going forward. The settlement is still currently in progress, which is great. We are opening talks with the title insurance provider to actively discuss the settlement around the purchase price rebuy for ourselves, as well as any cash flow considerations that were incurred around debt service and loss of rents through the period where the property was not being operated. So definitely stay tuned. We'll have an update for you here within the next month or two.
Incredible. And just continuing to ride along, David said, Alex, great interview with Rod Cleef. You mentioned again the secondary insurance that Mogul has on properties in the event they are not able to generate revenue due to catastrophic event. Can you explain further, is there a cap on that? Example, if a hurricane and made a property uninhabitable for an extended period of time? Thank you, David, for tuning in to that. That was a very fun time out in Sarasota recording with Rod. Great podcast there. But as for the secondary insurance, it's landlord insurance, which I think Joey could definitely go a little bit more in depth on if you want to touch on that.
Yeah, so we do take out two forms of insurance: dwelling insurance and landlord insurance. So dwelling insurance, covers what's called force majeure, right? Any acts of God, any acts of weather, flooding, etc., that would cause damage to the property, like we were discussing in Cape Coral and around Florida, right, with hurricanes and other weather-related events, including internal events for the property, right? If there's any damage caused by pipe burst, flooding, etc. So, at one point or another, people have probably dealt with insurance claims. They know how that works on the dwelling. The other portion is the landlord insurance, which is more specifically on the liability portion, right? And also the loss of rent, right? So if someone got injured on the property or someone sued the LLC, that insurance is in place to cover that liability and separate the individual and the partnership away from the liabilities of the LLC, which is tremendously valuable in terms of protection. And then also loss of rents, right? If the property is uninhabitable or something happens, like with the WAGs, or another scenario where we had a property in Houston actually that wasn't able to be operated because of a hurricane, because the fence was actually damaged, and so we weren't able to operate it. So they went off of 3 months prior rent, gave us an insurance payout, a distribution according to what those rents were, because the property wasn't able to be operated. So that's an example of how loss of rents works. But I hope that's helpful.
And just to quickly add, the loss of use coverage is usually 1 year's worth of underwritten rents is what the coverage is.
Pretty damn good. All right, we're going to do rapid fire on these ones to try and get out as many as possible. And if we don't get to your question, we will be reaching out to you over email here shortly. Do we have to file in different states? The Arizona one has an extra form at the end. And during the last webinar, you said something about Delaware. I also sent a K1 question through the chat, or clarifying K1 question through the chat the other day, and haven't heard back yet. We can reach back out on the clarifying K1 question. If John, can you make a note down on that?
Yeah, I can give it 1 second. So we do all of the state filing work for you, which is tremendously valuable. All you have to do is file the K1 with your return, no matter where the entity is formed, no matter where the property is operating. We handle all of the foreign registration. We handle all of the entity of compliance. So just another value of using the Mogul platform. And all you have to do is file the K1 with your taxes.
And then, Chris, is there an option to export the portfolio page information to CSV or such? There actually is. So if you go into the account page, we actually have a downloadable feature that if you go to account and then you go to wallet and you go to transactions, you can basically see all the transactions that happened on your portfolio, and you can export them in a CSV. So you could do your own whatever you want with those numbers. So we have a lot of features. We're going to be a little bit better about marketing the features that we put out there, but honestly, we spent a lot of time on the filter buttons there. We want to make it as beautiful as possible with it. So with that being said, the next question real quick. The Pinkman has some very high CapEx costs every month. Any more details you could share on this? It still is not paid out at all.
Yeah, so that one is in a full ramp up. We have had CapEx issues that were noted in the inspection reports and turnover that was associated with new tenants. Really excited to announce also that we do have a fee agreement too with Pad Split that will help this in the future. That's what I'll say on that. So yeah, stay tuned for the next few months for the payouts for the Pinkman.
And then where's the blog? Would love to see that. Mogul.club. And then I think there's /blog or something. If you go to Mogul.club and go to the learning session, we do have that. Can you add feature to see historical returns for existing Mogul properties on platform that are closed and performing from last year? With this, it would be easier to decide on markets and properties to pick for investing. I completely agree, and we're taking note of that. We're actually in the process of doing some pretty incredible things there. Refresh the page. Wonder why that is. Can you add features to? Oh, nice. Can you add feature? That's the one. Read the Jefferson. Is there a building entry on the first floor? There was for the garage, but what is the current status?
Yeah, on the back end of the property, actually, there's access to a flat part of the backyard.
And then Michael said, I have been hesitant on, not you, Michael, but another Michael.
Oh God, what did I say?
I have been hesitant on the Florida properties due to the low insurance in the chart. If you gave a background on the secondary insurance directly on the page, if you have any.
Yeah, so I can jump in there. So we do quote out all insurance costs prior to closing on the property and even prior to making an offer on a property. As we mentioned before, any deductibles that would be associated with premium insurance costs, according to hurricanes, for example, in the Florida markets, are capitalized in the reserves. So what you're seeing there in the quote is actually what we're receiving prior to closing on the property in terms of quotes. Michael, if there's anything you would add there.
No, that was good. Yeah, we get actuals from the current owner on insurance in addition to getting our own quotes. Yep.
And then last question, or two last questions, and then we'll jump in. I know this has been requested before, but I'd love to see Airbnb, pad split, etc. links on each of the property pages. Let us take that back. We've taken notes of some good features that we'll be adding in the next little bit here. So definitely appreciate that feedback, and feel free to reach out with any more feedback. And then the last one is, how long does it take to be accepted in a club? And other than clicking send a request, do I have to do anything else to join one? Can send requests to multiple clubs and then choose from the ones that accept me into their club? Exactly right. You can request as many as you want. It's up to the admin of the club to accept you, of course. And so you can join multiple, and then you could assign whatever investments you want to each individual club. So with that, I know we rattled through a bunch, and next time we'll be a little bit more conscious of time, as well as I believe we're extending it to the hour and a half next time, because that was what was requested in the previous webinar. Is there anything else that Joey or Michael you want to say before we say goodbye?
I mean,
No. Yeah, good, Michael.
I was gonna say, I think it's kind of cool. It has nothing to do with the webinar, but it's kind of cool in the background. Day turned into night on both mine and Joey's screen from the start to finish of the webinar. But other than that, great webinar as always. Thanks everyone for tuning in.
Yeah, really appreciate it, everyone. Definitely tune in next month as well. Really appreciate it.
Thank you, everyone. If you do have any other questions or product feature updates, of course, reach out to us. Really appreciate you. We wouldn't be doing this without you. So do appreciate everyone for joining, and tune in next time. Take care.
Awesome. Thank you.